John Deaton, a pro-Ripple and digital currency lawyer, has challenged Michael Saylor, chairman of business intelligence firm MicroStrategy Incorporated. Saylor has taken the stance that only Bitcoin is a legitimate digital currency. Deaton believes that the US SEC will have to prove that other cryptocurrencies are securities on a case-by-case basis. Saylor's position is wrong. He is one of the most prominent advocates for the claim that some cryptocurrencies, such as XRP, are not unregistered securities. John Deaton has made a strong case against Michael Saylor's position on Bitcoin Maxis, criticizing the notion that the US SEC considers all digital currencies apart from Bitcoin as securities. Deaton believes that the SEC will have to prove this on a case-by-case basis, and has argued that Saylor's statement is wrong despite his brilliant background. Deaton is an advocate for digital assets and has been helping to shed light on the ongoing SEC case for years. This is one of the most prominent attempts to correct the view of Bitcoin Maxis and make them more aware of the potential of other digital currencies. Cryptocurrencies are trading mostly flat today with Bitcoin holding near the $23,500 threshold. China-based developers can interact with Layer 1 blockchain Conflux, but the protocol's relationship with the country remains complicated. The suspension of Binance USD by Coinbase due to not meeting listing standards is one of the most recent crypto-related news stories. The rejection of a $100 million loan to Cogent Bank by DeFi giant MakerDAO is another. This article provides an informative analysis of the current state of the crypto market. It covers a range of topics, from the performance of major cryptos such as Bitcoin and Ether, to the complicated relationship between China and Layer 1 blockchain Conflux, to the growth of various China tokens, to the performance of decentralized exchanges, to the MakerDAO loan rejection. It provides a comprehensive view of the industry, and offers insight into the future of cryptocurrency markets. The Ethereum blockchain Sepolia testnet has successfully undergone an upgrade. This upgrade simulates the upcoming Shanghai hard fork that is expected to take place on mainnet in March. The upgrade, known as Shapella, enables validators to withdraw their staked Ether from the beacon chain back to the execution layer. It also allows them to keep validating if they choose to withdraw more than 32 ETH. The next step before the Shanghai fork goes live on the mainnet is to release the upgrade on the Ethereum Goerli testnet. This is expected to start in March. This article provides an insight into the successful upgrade of Ethereum's Sepolia testnet, which is a simulation of the upcoming Shanghai hard fork expected to take place on mainnet in March. The upgrade, known as Shapella, combines the names of Shanghai and Capella hard forks and enables validators to withdraw their staked Ether from the beacon chain back to the execution layer. Additionally, validators will now be able to withdraw rewards in excess of 32 ETH and be permitted to keep validating, while those who wish to fully withdraw can take all 32 ETH plus rewards and cease validating. The next step before the Shanghai fork goes live on the mainnet is to release it on the Ethereum Goerli testnet, which is scheduled to occur in March. Liquidity conditions in the Bitcoin and Ether markets have worsened over the past 3 months. This has led to concerns over abrupt price swings in the crypto market. Market depth, a metric used to assess liquidity, has decreased significantly since October. This has caused major funds to reduce their participation due to the amount of slippage associated. Volatility expectations have also decreased, which could lead to sudden volatility explosions in the market. Low liquidity and high volatility could have an outsized impact on the spot market price, due to market makers' hedging activity. The decrease in liquidity is attributed to the collapse of Alameda Research and FTX in November. This caused other liquidity providers to de-risk and migrate to decentralized exchanges. This article looks at the current liquidity conditions in the Bitcoin and Ether markets and how it has been deteriorating. The article goes on to discuss how this has caused traders to worry about abrupt price swings and how market makers may be contributing to this trend. The article also looks at the impact of the collapse of Alameda Research and FTX, and how this has caused market makers to scale back their activities. Overall, the article paints a picture of a market with low liquidity and a potential for high volatility, which could cause significant price swings in the crypto market. The most important point is that the Bitcoin, Ethereum and crypto market has traded in line with high-growth tech stocks since late 2020. The Morgan Stanley strategists predict that the stock market rally is a bull trap and March will bring a stock market crash that could drag down the price of Bitcoin, Ethereum and other cryptocurrencies. Despite this, investors are broadly feeling upbeat due to the market's 2023 performance so far. This article provides insight into the current state of the Bitcoin, Ethereum and crypto markets, which have become closely linked to the stock market over the last 2 months. The Morgan Stanley strategists suggest that the recent stock market rally could be a bull trap and that March could bring a stock market crash. They point to historical data that shows bear markets often pause between quarterly earnings seasons before falling further. The article also highlights that the Bitcoin, Ethereum and crypto market has traded in line with high-growth tech stocks since late 2020, and that investors are broadly feeling upbeat due to the market's 2023 performance so far. The Liquity token soared 35% Tuesday after it was listed on Binance's Innovation Zone. Trading volume surged by 382%, and it is currently trading at a 10-month high of $1.82. The token rose 45% earlier this month after Paxos was ordered to stop minting its centralized dollar-pegged cryptocurrency bust. Liquity is an Ethereum-based protocol that offers interest-free loans in the form of the LUS stablecoin. Currently, it has $596 million in total value locked. Binance's Innovation Zone offers trading of new tokens with higher volatility and risk. This article discusses the recent surge in the value of the LQTY token, the native token of stablecoin lender Liquity. Following its listing on Binance's Innovation Zone, the token increased by 35% and was trading at a 10-month high of $1.82. The listing further included Bitcoin and Tether trading pairs, as well as a USDT derivative pair. The increase in value for the token can be attributed to the New York State Department of Financial Services ordering Paxos to stop minting its centralized dollar-pegged cryptocurrency bust. Liquity is an Ethereum-based protocol that offers interest-free loans in the form of the LUS stablecoin for users who deposit Ether. The protocol has over $596 million in total value locked. Binance's Innovation Zone is a venue where users can trade tokens with higher volatility and risk than other tokens. James O'Byrne has proposed op_vault, a feature which alerts users when someone tries to steal their Bitcoin. It then thwarts the theft by diverting funds to a more secure wallet. It requires a soft fork, a backwards-compatible change to the blockchain. It is similar to another proposal by Jeremy Rubin called Check, Template, Verify. The fate of op_vault is unknown. O'Byrne has recommended speedy trial, a process used to activate the 2021 Taproot upgrade, as the preferred method for activating it. This article provides an overview of the feature called a vault, proposed by Bitcoin developer James O'Byrne, which is designed to alert users when someone tries to steal their Bitcoin and divert funds to a more secure wallet. O'Byrne's proposal is not the first of its kind, as Bitcoin developer Jeremy Rubin proposed Check Template Verify under Bitcoin Improvement Proposal 119. The key difference between the two proposals is that O'Byrne's is specifically for vaults, whereas CTV is a more general tool. The fate of op_vault is unclear, as Rubin recently announced an indefinite hiatus from Bitcoin development and the activation process is still being debated. Some members of the Bitcoin community have expressed concern about the speedy trial activation process, which allocates a 3-month window for the Bitcoin network to reach a threshold of miners who signal support for the upgrade. Overall, it is too soon to tell what will happen to op_vault over the coming months.